myself, Assistant Professor Shailee Vasita from LG Integrated MBA. Today, I'll be talking about the process costing, the fundamental cost accounting method used in industries where production is continuous and the units are identical. So let's begin with the what process costing is and why it matters. So, process costing is used to determine the cost of production of producing each unit when goods are mass produced. Costs are accumulated by the process or department over the period and the average cost per unit is computed. It is the ideal method of accounting for the industries where output is homogeneous. Further, let's have the definition given by the Kohler, the method of accounting whereby costs are charged through processes or operations and are averaged over the unit produced. It is employed principally where finished products are a result of more or less a continuous operation. This signifies that in process costing, the raw material is converted to finished goods is done through a continuous process. There are two or more than two processes which are taken over to make the raw material a finished goods. The examples are like paper mills, refineries, canneries and chemical plants. The process are carried in having one or more are having the following features. What are the features we see in process costing are that when the product of one process becomes the material of another, the input of process 1, okay, along with that input, from that particular input in process 1 you will get some output, and that output of process 1 will become the raw material or input for the process 2. Same way, in process 2, after getting the input, you will have some outputs from the process 2. That output of process 2 will become the input for the process 3. This will continue in each and every process till the raw material is converted into the finished goods. When there is simultaneous production at one or more process at different products with or without byproduct. See, it is not necessary that each and every process will have the byproduct. It is not compulsory. Some process only have mere wastage, nothing else. The another thing is that when we are going on one or more processes or operations of series, the product or materials can be different from each other only in terms of shape or form, not in their original identity, not change in the method of process. There will be no another change other than the shape or form of that product. Let's take an example of soap, right? In the market we can see different size of soaps, a small soap, traveling soap, the regular size soap. There are various sizes available for soap, so it can be different in the shape or form. Now further, what are the features of process costing? See, let's look at some of the key features. Costs are recorded process wise. The output of one process is often the input for the next. Work in progress at different stages is a common occurrence, and we usually calculate it as a cost per equivalent unit to handle it. Okay. So further, the features were the only thing which we have discussed the in the prior end. These are the examples where major industries are using process costing for the mass production in the industries for the producing the standard products. And the industries are textile mills, chemical works, soap industries, food processing industries, sugar industries, paper manufacturing industries, plastic manufacturing industries. The cost of process costing is calculated in a different manner. Instead of the whole process taken up together and calculated as we usually do, it's not done over here. The costing is done process wise. Each process is been calculated on a unit based. How much cost a process occurred in the particular process will be calculated in that particular process account only. Here it is the performer of process account. The left side shows the basic material, that are the cost incurred by us, that is your material, labor, overheads, and the right side records the outputs including the normal loss, abnormal loss, and transferred goods. So this performer itself shows that the debit side have the inputs and the credit side have the outputs. Now the outputs can be of loss, can be the output transferred to the next process. Okay, so let's understand it in a more clear manner. Each process account is debited with cost of material, cost of labor, direct expenses, cost of labor incurred in that process, direct expense incurred in that process, overheads charged to that process on some predetermined base, cost of rectification of normal defectives, cost of abnormal gain if any arises in that process. The items on the credit side of process account are: each process is credited with scrap value if it is occurring, scrap value of normal loss, and cost of abnormal loss. Now further, let's discuss the process losses and wastage. See, in any process you will incur the loss. Loss is very common, it will occur. The nature of some losses is inherent in production, that is, wastage of material, evaporation of material. These are the unavoidable loss in some process. But sometimes the loss which occur due to man-made mistakes, right? That is negligence of laborers, poor quality of raw material, poor technology, etc. These are the avoidable losses. So the basic bifurcation in loss is that first of all, the unavoidable losses, that are our what, normal loss, because how much you try to avoid this loss will occur anyhow. So these losses are known as normal loss. The unavoidable losses are what? Our normal loss. The loss which we can avoid, that are our abnormal loss. So as there are some formula through which you can calculate your normal loss, but let's discuss more about normal loss. So normal loss is an unavoidable loss which occurs due to inherent nature of material or production process under normal condition. It is normally estimated on the basis of past experience of the industries. It may be in the form of normal wastage, normal scrap, normal spoilage, normal defectiveness, and it can be occur on the any time of the process. To calculate the number of units, see, in normal loss, first you will calculate the units of normal loss. After that, you will calculate the cost incurred of that particular normal loss. So to calculate the normal loss units, you will multiply the expected percentage of normal loss with the input. Okay, For an example, your input is of 100 kgs and your normal loss is 1%. So you will multiply it. After that you get the units of normal loss. You will find out your normal output. So your output was, the input of this particular was 100 kgs. Your percentage of normal loss was 1%. So the units of normal loss will be 1 kg. Now the normal output formula is unit introduced minus units of normal loss. So how much units? It can change. Instead of units there will be kg right now because we are having the example of kg. So how much kg you introduced? That is 100 kgs. Units of normal loss, how much normal loss you incurred? 1 kg. So your normal output will be how much? 99 kgs. Now after finding the units, after finding the normal output, the third step is to find out the normal cost of normal output. What normal output means? Normal output means the actual output after eliminating all the loss, all the unavoidable loss. So total cost minus the scrap value of the normal loss. Okay, so the total cost can be, for an example we can take, the input was of 100 kgs and it cost us 1 rupees. So our total cost was also the 100 rupees, right? Now the total cost is 100 rupees and the scrap value for the normal loss is 2 rupees. So how many kgs of normal loss we have? 1 kg. So 1 kg into 2 rupees is equal to, again, the scrap value we got is of 2 rupees. So our total cost was 100. From that we deduct our scrap value, that is 2 rupees. So our normal cost for our normal output was how much? 98 rupees. So I think you are getting the method how you calculate the, you are getting the way how normal loss is being calculated. Now further, this was about the normal loss. Now, what are the effect and entries of normal loss in our process account? In process account, units of normal wastage is shown in the unit column of the credit side, right? It will be shown on the credit side of your process account. If there is any scrap value, then it will be shown in the amount column of the credit side corresponding to the lost units. See, it is not necessary every time your normal wastage have scrap value. Sometimes there would be no scrap value. Then in your process account on the credit side units column, you will have the units, but in amount column there will be no amount. Okay. Generally, the cost of normal loss is absorbed by the cost unit. The cost of normal loss is considered to be the part of production. See, this is the unavoidable loss and it is to be bared. Because of that, it is considered as what? Part of cost of production. If normal loss units have any realizable scrap value, then process account will be credited by that amount. So, it is included in the total cost of production, due to which cost per unit increases. The cost of normal loss therefore not worked out. The number of units of normal loss credited to process account, and if they have scrap value they will be shown on the credited side. If there is no scrap value, no realizable value, only units will be credited to process account. I hope now you are clear with the normal loss calculation and its effect in the process account. Further, let's discuss with the abnormal loss. What do you understand by abnormal loss? As we discussed, it is an avoidable loss. How you can avoid it? Being more careful, right? So any loss caused by the unexpected abnormal condition, right? Ki, for an example, the truck taking up the raw material or the tins in which the material was brought, it got leaked, right? So the conditions such as plant breakdown, substandard material, carelessness, accident, etc. Abnormal loss can be occurred also in the level where you get the different quality of raw material which you were actually using for your production. Instead of that, you get a lower quality of raw material. This can be also lead to your abnormal loss. The carelessness, the plant breakdown, the laborers are not well aware with the method of operating the plant, and they might do some error and it will lead to a plant breakdown. Because of the carelessness, there could be more wastage, and somehow laborers are not that much aware of the process of operating the plant. They may come up with an industrial accidents, right? So such losses are in excess of predetermined normal loss. These losses are basically avoidable. Thus, abnormal loss arrive when actual losses are more than the expected losses. See, normal loss is expected one. We expect that this much amount of wastage or this loss is going to occur. But abnormal loss is such a loss which we have not expected, and it is more than our expectation. Cost of normal loss is set by the goods units of production in the process, but same cannot be given to abnormal loss. Abnormal loss will not be taken up by the production process. It is not the part of production, right? The units representing the abnormal loss are valued similarly, like the goods units produced and value of units representing the abnormal loss are debited to separate account, which is known as abnormal loss account. If normal loss has got any scrap value, it will be credited to your abnormal loss account and balance will be written off to the costing P&L account. This is the brief thing which we can discuss about abnormal loss, and this will help you for the better practical clarity of process costing practical sums. See, now you can see the performer of abnormal loss on the right hand side. What it is showing to process account on the debit side. It means what? For an example, process 1 has an abnormal loss. Then we'll show that abnormal loss on the credit side of that process account, and from that particular account it will be debited to the abnormal loss account on the name of process account. By bank account, it is for the scrap value generated from that particular abnormal loss, and rest of the amount will be given to the written off to the costing and P&L account. This is the basic thing in your abnormal loss account you taken up for every process. Now, how will you find the value of your abnormal loss? So, abnormal loss is calculated with the help of following formula. Normal cost of normal output. As we have discussed what is normal cost of normal output, we are well aware. Divided by the normal output. We know what is normal output. Input minus the normal loss units into the units of normal loss accounts. This is the particular formula through which you can get the units of value of your abnormal loss. Abnormal loss is transferred directly to your P&L account also. Value of abnormal wastage, again it's a formula for getting the value of abnormal loss. Normal cost of normal output divided by the normal output into units of abnormal wastage. Further, it was about the abnormal loss. Now we'll be discussing abnormal gain. See, it is not compulsory that in every process you will have loss, right? In some process you might have some profit. Then in such scenarios, what will be the effect? It will be totally opposite to how you are doing for the abnormal loss. So what is abnormal gain? In actual production, if units are produced more than you have decided, you have thought that with 100 kg of input I'll get 50 units, but instead of that you get the output of 55 units. So it's a gain for you, right? So the difference between two is, see, your anticipated units and your production units. The difference between them after deducting the normal loss. Dear students, mind well, normal loss is such a factor which it not should be avoided at any cost. It is always there as a part of calculation in every process. The valuation of abnormal gain is done in the same manner like abnormal loss. The units and amount is debited instead of credit. It will be debited to the relevant process account and credited to abnormal gain account. So the formula is also the same to find the value of abnormal gain, and instead of abnormal loss you will have the abnormal gain units. Now on the right hand side you can see the performer. First of all you will realize debit side the normal loss, as it is considered as a part of production. So first of all you will realize the normal loss. After that the income from the normal gain. First of all the income from the normal gain, you will realize your normal loss. After that rest of the amount will be transferred to costing and P&L account.